Dozens of companies desert the ASX as the biggest local businesses look to list overseas. Unions to test BHP on same job, same pay rules. And the three biggest tech companies in the US are now worth the same as Australia's residential property market and superannuation system combined. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 13th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, shareholders have agreed to Irish group CRH's purchase of Adbri, meaning the company will disappear from the ASX. It adds to the growing list of companies, more than 30, to have disappeared from the local bourse this year alone.
By my count, Michael, 32 companies have delisted this year. They may not be large, but there's a lot of them, and they include companies like Volpara Health Technologies, Azure Minerals, Link Administration, AVZ Minerals, Millennial Services Group, BWX, A2B Australia, Boart Longyear, Wiluna Mining, White Rock Minerals, Black Mountain Energy, Whisper, Costa Group, the big agricultural group, Technology Metals, Carbon Minerals, Sezzle, and Allcom. In recent years, there have been some very large companies disappearing from the exchange. So this is prior to 2024. Groups like Sydney Airport Corporation, Afterpay, Oz Minerals, to name a few. Newcrest is another, though its acquirer, Newmont Resources, has a secondary listing on the ASX. The scary thing is that there are very few new companies coming along to take their place. Just 45 initial public offerings last year compared to the annual average of about 120. The Guzman y Gomez float scheduled for next week is an IPO, but generally the cupboard is pretty bare. Anyway, back to Adbri. More than 97% of proxy votes were cast in favour of the CRH buyout, and the company, formerly known as Adelaide Brighton, with a history in the Australian building industry dating back to 1881, is now Irish-owned.
Sean, why aren't we seeing big companies list in Australia? And I suppose the follow-up question is, are there any out there that might just list and kind of give a bit of oomph to the market, when that is a technical term in financial markets? Yeah, oomph.
Yeah. Well, look, the obvious float for the Australian market is Canva, the online graphic design group valued at around $40 billion. The group, which began in Perth, is expected to hit the market next year, but it will be in the US, where the pools of capital run much deeper than in Australia. Listing on NASDAQ, if you can, is much more attractive than Australia. Yesterday, founder of Canva, Cliff Obrecht, was at the Morgan Stanley Australia Summit, and according to media reports, he spent his time in the spotlight pushing the credibility of his company. Life360, the online tracking business, is listed on the ASX, but last week debuted on the NASDAQ as well in an effort to lift its profile in the US. Occasionally in Australia, a mid-sized company buys something that makes it big. So Sigma Healthcare at the moment is buying Chemist Warehouse, for example. That'll become bigger. But in short, big companies don't list in the ASX unless their business is very locally focused. And there really hasn't been any big listings for a long while. Given the amount of money going into superannuation and the amount of money that needs to go into equities, it's becoming a problem for superannuation fund managers to find somewhere locally to put their money.
Oh, it's a fascinating story. Taking a broader look at local markets yesterday, how did things go?
The S&P ASX 200 closed down 0.5% to 7,716 points, with 10 of the 11 sectors in the red. The material sector was the worst performer as iron ore prices headed towards $100 a tonne. Fortescue Metals Group and Rio Tinto both fell more than 1%, while BHP was off 0.7%. Interest rate sensitive stocks also fell ahead of last night's Federal Reserve meeting on rates. An example was WiseTech Global. It closed down 3%. Other poor performers included Wesfarmers and CSL. Woodside was the best of the large caps, jumping 2.7% following an analyst upgrade on the stock. Best in the day was Helios, up nearly 9%. Nickel Industry was the worst of the top 200, down nearly 8%.
And what about international markets?
China's consumer prices rose less than expected in May, and factory prices dropped for the 20th month in a row, fueling concerns over persistently weak demand in the world's second biggest economy. While we're all worried about inflation, it's the opposite in China, and that's not so good for Australia. We, of course, sell plenty of iron ore to China. We'd need a bit of inflation in that economy. It ain't happening. Gold prices are up a touch and the Aussie dollar is buying 66.2 US cents. Oil prices are higher after figures show a shrinking US crude stockpile. Now, Brent crude's trading around $82 a barrel. This, of course, suggests there'll be pressure on local petrol prices, which made me check what's going on around the country, courtesy of the Australian Competition and Consumer Commission. Right now, Sydney prices are way above the peak levels of last cycle. Very, very expensive. Melbourne prices are on the way back to the last peak. Not very expensive, just expensive. Same deal in Brisbane. Adelaide prices are falling, while Perth prices seem to be at their low point.
Sean, you mentioned just then the US stockpile, US crude stockpile. And that got me kind of thinking about kind of where is this stockpile? Is it actually...
Yeah.
And there is such a thing as the Strategic Petroleum Reserve.
Yes.
Which is a US government, and this is fascinating. This is actual facts, not just me making stuff up as I go along. And it is the largest emergency supply kind of in the world. It's a complex of 4 sites, and they've got these massive, massive underground storage caverns created in salt domes along the Texas and Louisiana Gulf coasts, has the capacity for 714 million barrels. Isn't that huge?
Wow. Wouldn't it be cool to see it?
I know. I was just thinking about that. Could we do like a Fear and Greed excursion? What about that?
Yes.
What about guided tours with Fear and Greed where we go to see all the things that interest us? So we'll go and see these giant tanks full of oil. Then we would go and see like Cape Canaveral and various kind of other space things. Obviously, that's for me. And then we would go and see if we could get perhaps into Fort Knox.
Right, for the gold.
Yep.
We'd definitely try and charge into the Federal Reserve in New York.
Yep. And I think we've got absolute Buckley's chance of getting into any of these places.
Yeah, Mar-a-Lago, I wouldn't mind going there.
Yeah. Round of golf with the former president.
Yeah. I think that we could go to Delaware. Actually, we'll talk about that later in the show. Delaware's in the news today. Excellent court system in Delaware, but we'll come to that.
Oh, yes, we will get to that. And Sean, I need to also mention something else that we will get to later on, an interview that you have coming up after the show.
Oh, yes.
You're speaking today with Stephen Fennick, the editor of techguide.com.au, who is in the US at the moment.
Yes, so he's at Apple headquarters. Maybe that could be part of our excursion. Apple headquarters. Yeah, I like it. Apple, of course, have announced in recent days their push into Apple intelligence, not artificial intelligence, Apple intelligence. We talked to Stephen about what that means, what it means for the smartphone. I thought he kind of explained it very well, what you could do with the smartphone, but what type of smartphone you need, an Apple smartphone, but the version you need. Fantastic look into what it all means for us. Also, we talk about virtual reality headsets, which he's a bit of a fan of.
Yeah, it's a great chat. It's coming up a little bit later on after the show, but Sean, we'll be back in a moment with the rest of the day's business news. Sean, Trade Minister Don Farrell said local winemakers have sold $86 million worth of stock to Chinese consumers since April when Beijing dropped its punitive tariffs on Aussie exports.
He was speaking at a winery in South Australia's McLaren Vale, which was particularly apt because this weekend, Chinese Premier Li Qiang is due to visit Australia, beginning in Adelaide and commencing with a lunch at a winery with Prime Minister Anthony Albanese, Foreign Minister Penny Wong, and Mr. Farrell. It signifies further easing in relations between Beijing and Canberra, which of course have improved since the election of the Labor government. Meanwhile, a poll shows that 35% of Australians will factor in Australia's China policy when they vote at the next federal election. The poll by the Australia-China Relations Institute and the Centre for Business Intelligence and Data Analytics at the University of Technology, Sydney, makes the Chinese Premier's meeting with Mr. Albanese all the more interesting.
Indeed it does. Now, the Mining and Energy Union has filed same job, same pay applications against BHP's labour hire firms. Now, this is the first time that the Albanese government's new laws will be significantly tested.
The applications seek to lift the pay of about 1,700 workers by between $10,000 and $40,000 a year. BHP last year said the new laws would cost the company an extra $1.3 billion a year, equivalent to about 5,000 full-time workers. The workers that this application includes are employed across 3 open-cut mines. They're paid by 3 companies, one called WorkPack, another Chandler McLeod, and a third, operations services, which is actually BHP subsidiary. The cases are complex because it's difficult to compare workers on the basis of skills, rosters, pay, including bonuses, etc. That's why it's such an important test case. MEU Queensland President Mitch Hughes said it was important to address what he called BHP's labour hire rort, given it's the biggest player in the coal industry, and the application is a major step towards changing the model. Everyone will be watching this one closely.
Yeah, certainly will be. Sean, the number of job ads over the past year have fallen by around 18% as the slowdown hits the economy.
Online employment company Seek says national job ads fell 0.6% in May and 17.9% over the past year. The number of applicants per job has also increased by 0.3%. Now, the areas where job ads have fallen include hospitality and tourism, manufacturing and transport, and logistics. Healthcare and medical and education and training actually rose month on month. New South Wales has had the sharpest decline, followed by Queensland and Victoria. Of course, none of this is a surprise because we have much higher interest rates, so the job market should be slowing down. Exactly how much, we'll find out more about that today when May's unemployment figures are released from the Australian Bureau of Statistics.
Apple will allow iPhone users to access buy now, pay later style loans from ANZ directly from Apple Pay, and it's open to adding Afterpay and Zip to its digital wallet as well.
Apple today ANZ was among a handful of global banks expanding services inside Apple Pay by integrating its credit card instalment payment plans. ANZ was the first Australian bank to let its customers make card payments directly from iPhones in 2016. That forced other major lenders to respond, according to a story in the Financial Review. The latest move highlights a split from Commonwealth Bank, which is sceptical about ceding control of customers to Apple. Its boss, Matt Comyn, has been leading calls for more regulation in Australia, including ensuring banking apps can access Apple's infrastructure on fair terms. ANZ has more or less gone the other way. It will let existing credit card customers create simple repayment plans at the time they wave their phone over a payment terminal. Presumably there'll be a pop-up and it might say, do you want to pay in 4 installments or pay on your credit card right now? Now, currently the feature is only available via the ANZ app after you've actually done a credit card transaction. This will make that a lot easier.
Now, Sean, in the main story today, you mentioned the Guzman y Gomez float. It is scheduled, of course, for next week, but not everyone's convinced that it's been fairly priced.
Morningstar brokers have done some work and reckon it's worth around $15 a share. $7 a share less than what the group intends to list at. Morningstar essentially says its growth plans, Guzman's growth plans, are too optimistic. Now, Guzman is expected to float on June 20 and be worth about $2.2 billion, but Morningstar doubts it can achieve its forecast of going from 185 stores to 1,000 stores over the next 2 decades. Morningstar says other listed fast food chains like Domino's Pizza and Collins Food, which operates KFC stores, are better value for investors. Of course, Michael, we at Fear and Greed are not an investing podcast, so don't take it from us. In fact, definitely do not take it from us. Go and speak to a financial advisor before making any investment decisions.
That is a very good recommendation, Sean. Now, Australia has upped its aid for the Gaza region as the Prime Minister says a United Nations Security Council resolution calling for a ceasefire is a significant breakthrough.
The new funds from the federal government will be directed to the World Food Programme for assistance for civilians facing the risk of famine. The extra money will take Australia's humanitarian contribution in Gaza since October 7 to $72.5 million, according to AAP. Now, the Security Council has backed a US-drafted resolution calling for a 3-phase ceasefire. Initially, there would be a 6-week ceasefire with an exchange of hostages held by Hamas, as well as prisoners kept by Israel. The second phase would involve a permanent ceasefire, while the third would cover a reconstruction effort for the Gaza Strip. The resolution calls on both Israel and Hamas to fully implement a ceasefire without delay and without condition. Mr. Albanese said Australia fully supports the plan.
Now, turning to international news, Apple's unveiling of its artificial intelligence offering for smartphones, including a new version of Siri, has sent its share price up 7%, pushing its market capitalization back above $3 trillion and threatening to overtake Microsoft as Wall Street's biggest company.
Between them, the 3 big tech titans, Microsoft, Apple, and chipmaker Nvidia, are worth more than $9 trillion. That's around $14 trillion in local currency. It's about the equivalent of the Australian residential property market, all of it, plus all the money invested in superannuation. Last week, Nvidia had become the second largest tech company over Apple, but this week Apple fought back in the battle of big tech. Microsoft now has a market capitalization of $3.22 trillion US dollars. Apple sits at $3.18 trillion US dollars, and Nvidia is at $2.97 trillion US dollars. The three of them comprise more than 20% of the S&P 500, which, as the name suggests, has 500 stocks. Clearly, the rumours of big tech's demise have not eventuated.
I think that might be right, Sean. And I know that you wrote about this as well in yesterday's Fear and Greed weekly newsletter, which goes out every Wednesday and has been very well received. Yesterday's edition, chock full of your unadulterated, unfiltered thoughts on everything.
On economics and markets.
Whew. Oh, yeah.
Sexy stuff.
It is some saucy writing. Anyway, sorry, I kind of threw myself off there.
Got out of control there, yeah.
Yeah, didn't it? Went to a dark place. But head along to fearandgreed.com.au and sign up for that newsletter if we have not convinced you to otherwise, because who wouldn't want that?
Who wouldn't?
Every Wednesday morning in your inbox. It is safe to read at work. Finally, Sean, last story, you mentioned this. You alluded to it earlier. President Joe Biden's son, Hunter Biden, has been convicted by a jury of lying about his drug use to illegally buy a gun, making him the first child of a sitting US president to be convicted of a crime.
A 12-member jury in Wilmington, Delaware, the Biden's hometown, found the defendant guilty on all three counts against him, according to Reuters. The 54-year-old lightly nodded his head after the verdict was read, but otherwise showed little reaction. Hunter Biden faces up to 25 years in prison when he's sentenced, though as a first-time offender, he would not get anywhere near the maximum, and there's no guarantee the judge would send him to prison anyway. The judge did not set a sentencing date. President Joe Biden, in a statement, said that he would accept the outcome and continue to respect the judicial process as Hunter considers an appeal. The sidebar to this story, and what everyone's talking about, is the reactions of the Republican Party. So we now have a convicted felon as the Republican nominee, Donald Trump, and the son of the president is a convicted felon. But the Republicans have trashed the whole concept of judicial independence, and therefore they can't sort of lay into Hunter Biden too much without looking like they're laying into their own Republican nominee, Donald Trump. So it's actually a very fascinating kind of a dance that the Republicans are playing over there. Just at the same side, Joe Biden, he said, let's respect the judicial process. There's a political angle to that one too.
All right. Up next is the Fear and Greed Daily Interview. You're speaking today with Stephen Fennick, editor of techguide.com.au.
Sure am, all about what's happening with the Apple artificial intelligence, AI, or as he mentions it, Apple Intelligence. It's going into your smartphone soon. Well, if you do have one of the latest versions of iPhone, you'll probably get it. Anyway, we talked to Stephen about exactly what Apple is doing in that AI sphere.
This is why when we want to talk about AI and technology and things, we go to an expert like Stephen and don't leave it up to you, Sean.
Yes. I have nothing to say to that, but yes.
It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thanks, Sean.
Thank you, Michael.
It's Thursday, the 13th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.